Hello, I'm Joseph Quijano, Certified Financial Planner, and I want to welcome you back to our channel. And we want to thank you so much for all the questions and all the comments that you've been leaving in our channel. One of the most important questions that we have received over the last 3 months has been, how do policy loans really work with the Become the Banker strategy or the infinite banking concept? So I'm here today to explain to you exactly how a policy loan really works so you can do your own financing, whether it's a car, a home, anything you want to finance. It's what they call family banking. But you need to know the mechanics as to how a policy loan really works. So let me explain this to you real quickly here. First of all, if you look at this circle right here, this is your life insurance policy. This is the infinite banking life insurance policy. You can contribute to the policy by making premiums, or you can do either monthly premiums or annual premiums, or you can also do a lump sum going into the policy. So this is the monthly premiums, the lump sum going into the policy. Now, part of the money that you're putting into the policy will go to buy a death benefit. And the death benefit is normally right here, right on top of the policy right here. And the other part of the money that you're putting in on a monthly or a yearly basis is going to go to your cash value or the equity of your policy. Now, the cash value in the contract is guaranteed to grow at a certain interest rate, and that normally ranges between 2 to 4%. Now, if you choose the right company, and this is really crucial, if you choose a company that's what they call mutual companies, they will also offer you a dividend, which is really a return of premium legally, but it's really the profits of the company. So every single year, a mutual company will distribute dividends to their policy holders. And the dividends can range. They're not guaranteed. They can go up or down or not be paid at all. The companies that we use have been in existence for over 100 years, and they have never missed paying a dividend. So the dividends typically range between 1 to 5%. So you can see that the guarantee policy will grow at a high rate of interest, which is totally tax-free. Now, let's assume that you want to finance a purchase. It doesn't matter what it is, you can finance a purchase. You're not borrowing the money from your life insurance policy. This is really the key to the Become the Banker strategy. You will be borrowing the money from the life insurance company pool of money. And the life insurance company has billions of dollars in assets. And they will make their assets, they will make their pool of money available to you to use as a policy holder. Why? Because it will be a very safe strategy for the company to use. Number one, if you were to pass away, guess what? The policy loan will be paid by the death benefit right here. And if you were to quit the policy, just cancel the policy, the company's secured. It's a secure loan because they can have your money from the cash value. So let's assume that you want to borrow not from your policy, but against your policy. And let's say that you have $20,000 right here in your cash value of the policy. You build it up to $20,000 and you want to borrow $10,000. And the $10,000 could be for anything. Pay off a Visa, a MasterCard, or just buy anything you like. Now, the money that you get from the company will come from the life insurance company pool of money right here. So the company will send you a check for $10,000. Now, the company is not really interested in you paying back the principal of the loan. They only want you to pay back the interest. But it's really important to pay off the principal as well. But I mean, you don't have to worry about paying it unless you want to. Now, once the company sends you a check, you will do your financing. You purchase the item, and then you set up a repayment schedule. And that repayment schedule really is up to you. It's not up to the company. What the company is concerned about is really getting back their interest. And the interest rate that most companies charge today is between 5 to 8% per year. And that is what they call simple interest. That means that it's not compounding like a mortgage or a credit card. So the companies that we use charge only 5% on their policy loans, 5% simple interest. So every year the company will send you a statement as to how much interest you will have to pay. Now you do have to pay that interest rate, because otherwise, if you don't pay it, it will just capitalize the loan. So you want to make sure that you pay at least the interest on the loan. But if you borrow $10,000 from the company against your $20,000 from your policy, how much money would you have available to borrow again? Only $10,000, right? So the basis of the Become the Banker strategy is to pay back not only the interest, but to also pay back the principal, so you can replenish your cash value portion of your policy. Now, that is the beauty of the Become the Banker policy loans. I do want to specify one thing. The death benefit will be reduced in accordance to the loan if you were to pass away. The cash value will also be reduced as to how much money you can borrow if you don't pay it back. So my advice to you is to pay back not only the interest, but also the principal of the loan. If you have any questions, give us a call at 303-779-6600, and we'll take you by the hand to show you how to maximize the use of the Infinite Banking life insurance policy loans. I want to thank you for watching this video. If you haven't subscribed to the channel, subscribe to the channel. We try to put a video or two every single month, and we welcome your comments and ideas. So thank you for watching. Like our channel and hit the notification bell so we can aware you when the next video will be taking place. Again, we thank you and welcome to Become the Banker.